Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 9th, 2019. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here that price is basically continuing to push up, quietly higher the last couple of days here, and has hit the FOMC key level. That was our target we talked about before. We mentioned this on the day of the FOMC that at times, especially in the current market, when this level is forming, it's going off right immediately. And whenever it finds a strong low, the market will tend to come back to that level for a retest. It did it back here when you had the November 8th number. It came back, fell just shy perhaps by a couple of ticks there, but then dropped right back off of it. So you can see the behavior right here. That's the November 8th. Sold off away from it. It came back, tested it perfectly, and then dropped significantly. And so, again, we've gotten the first move. We've gotten the second move. What's going to happen next? We're right back at a key level. This is major support, that 2600 level right there. There it is. Let's not obscure it. 2600. Support, support, support. There's the break. There's the retest, and here it's come back to retest it again from below. So we're right back at a spot right here that would suggest that there is going to be some manner of resistance, at least, even if it failed, even if it was only small. Right now, this level has a lot of overhead resistance. It's reached a target, and while the overall up moves could still be intact, especially say if price were to pull back to 25.30 or so, make this right here prior resistance support, and then it could start to work its way back up, that would be just fine. But there may be some sort of resistance that comes into play in the zone. If there is going to be a push beyond it, it may be a big transition day, a day that goes boom, way through it, so that prices are now back above that level and working toward 2800, because if 2600 is regained right there, if price is able to reestablish back above 2600, you likely see a path toward 2800, as that is the prior price distribution. Failure to get back above 2600 opens up a retest as low as 2300, and perhaps even lower, much lower, if this is the type of rejection that it could be. So again, got to keep our bearings about ourselves right in the zone and continue to watch for potential signs of acceptance back above 2600 or rejection. Alright, here's a look at the NQ. You'll notice right here the very similar type of price action, pulling back, reaching the FOMC target here finally, again from December 19th. This is one, the FOMC key level from November 8th. It sold off away from it. It came just shy before it sold off heavily. The September FOMC key level sold off, and when it bounced, could never quite get back to it. That's when we knew something was different, and that's when we started to see the beginning of what became a broader pullback. So now we are retesting that level from below. Typically speaking, after it goes offward, you may see some sort of pullback as well. This market right here is trying to reestablish back above the 6500 level. That is where support is, right in the zone where it went offered. It's trying to get back above it right now, holding above 6500. Even if we were to come back a little bit below it, 6400, and then bounce back above it, again would open up a move as high as 7200 to the opposite side of this price distribution here. So any pullback holding right there could be a great continuation higher. Again, gonna watch this area for signs of rejection to see if we are indeed headed lower, or maybe the short trade might be too full, and that could cause quite a squeeze ahead. So again, gonna continue to watch this zone. If we take a look at crude oil, already up 2% today. Quite a move again. This one has had its biggest move from the bottom to the top here, and since before the sell-off occurred in October. This is the biggest up move we had seen up to that point, or since that point really, But after that, it's been all downside with some sideways. So again, this one is outperforming to the upside at the moment. It has recaptured prices above 49.50 and doesn't appear to be slowing down right now. So reestablishing back above 50, as we mentioned previously, 49.50 would suggest that we're headed back to 55 for a retest. So we will see if this thing continues to show strength. But right now, not really showing signs of topping out just yet, although that could happen at any moment. So we'll continue to keep an eye on that. Let's take a look lastly at gold futures. Gold has been pulling back from the recent highs here over the last 4 days, continues to be in a very, very bullish trending structure at the PEMA trigger zone, just above the pivot range for the month. But overall, everything's still pointing up. So right here, even if there was a little bit of a flush, this is still a great spot to watch for what could be the next, swing move up. Whether it's 1 to 3 days, maybe 5 days or more, this is the right spot to watch for bulls looking for a continuation. Any failure to hold, say, the 1275s would open up more pullback as deep as 1250, and that could still be a great spot to watch for a larger or longer time frame bounce opportunity, because this market may be headed much, much higher toward 1360 if prices can continue to hold above 1250. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.